Good afternoon. How are you doing? Let me just bring NetEase, NTES. It's a Chinese stock. It's an ADR. It had a nice breakout today in the call options that you're looking at here at the 260. Now, let me go ahead and pull up the actual chart. What I have here is NetEase. What is it? A 270 put ops, it's going to be a 270 put option that we're going to take up here at the high, and I'll tell you why. Because um, we're looking for the biggest breakout, and there was one. And we're going to take that $1.80, 6 by 680. That way, there, you can do the math. Okay, that's 80 pennies, and you got your 560 on the low. So there's a spread right across the bottom and whatnot. And there are call charts and put charts. So we're looking at that side of the trade because it's wholesale. And once again, I mean, I can't stress it enough on what that resistance is like and reducing the risk. When we're at resistance, that's the time we want to buy that. We want to buy the put side because we know that the put side was lower, and it was in the price on the 270. It was right here. See it? 630 by 730. Check it out. 680 on the high. Look at that spread, 1.2. Look at the volume. I control the volume. You can darn well bet that, and I do. And so that's by having more contracts out there at the price entry. That is what the freeoptiontrader.com does, and we know it. And we know getting wholesale is a lot of fun, and selling it back to the public for a little bit higher price. We call that market making. That's what you want to be. And we have 12-month programs for that and 90 days, meaning that you spend a whole year with us. This is what you want to do. You want to commit it to yourself. You tell yourself, hey, look, I'm glad I found the right place to come to. And you have. And you're going to notice that in your free 5-day trial. And you're also going to notice the limit orders and the way of doing business is different than what you do in the retail model. Okay? So let's keep that in check so that you know the reasons why. Once again, it's all about getting that option, that wholesale entry. I'm going to show the other side of that call. When NetEase broke out, here's what it did. The 260 call. We already did the 260 put. Now, I'm going to put this in here. I just want to see if there's anything there. Yeah, that's what I figured. So, on the 260 call, the $260 call on this NetEase went from, well, it's very simple. I'll point it out to you easy enough. So, that low over here was 40 cents. That high was $4. So it was a dollar on the open. The high was $4, and it was, and that 260 call is overbought now up here to its risk because the stock, once again, the stock has a 100-week resistance line. So once again, it comes down to getting that wholesale entry. At least when you're getting in that wholesale entry, if there's a stop loss to be applied, hey, no problem. We can do that all day. But it's stop losses are part of the business. Making a market on both sides. Or forever how long it's paying when it's in that price. We give out the prices. We own our own exchange. And we do. And you'll see that in your free 5-day trial as well. So there are a lot of options for who? For you. How to trade NetEase, a $60 breakout in the option, and then we went and we looked at a $70 put in the option. So now we're able to sell out up here on the 260, and now we can buy the 270 put, and that entry's safe. Why? Because the stock is on a weekly resistance level. The price of it's been marked down to 6.3 right now with the 1.2 range. Big deal. The ranges will open up though, but these are how these kinds of options are buyable with the lowest risk, because we've already made all that money on the 260 call. Now, what do I get to do? I get to get a wholesale entry to take the 270 put option on NetEase. Why? I already told you why. We're going to give out the wholesale bid. We'll see you in the free 5-day trial, but we're going over NetEase again. 260 call, NetEase. Guess what else we got? 270 put, which was up here. And this is how they opened it. I already said it. $6 and $5.60 on the low, $6.80 on the close. Big deal. But it's wholesale. It is really wholesale and whatnot to look because of the resistance on the price. This is cheap. And it can go a little bit cheaper. That's why you don't buy it all at once. You buy it within a mathematical script that you're given when you're in that live trading room. And that's exactly how you're going to do it. You know it, and I know it, because true equals true in price.